Very early on a Thursday. Very, very early. The room is not open yet. The room opens up at 6 a.m. But anyway, I am in 5 trades. Actually, the euro is not on the screen. But I am in the trades based on the alerts that I posted last night, a bit after 7 p.m. And what I do then is I draw these levels on my charts, which I recommend for our members to do as well. So the blue means a buy level, red means a sell level. So this is the Nasdaq, buy level all the way up there. The S&P, there is a buy level at 41.42, I believe it is. And the dashed line you see is the halfway point between the buy and the sell. And basically, I am bullish above the halfway point. I am bearish below the halfway point. And if you just give me 1 second, I need to put a couple trailing stops here, gold and oil. That's what I do for the most part. When I'm taking out of a winning trade, I am taking out on a trailing stop. I just allowed the market to take me out. And this way I can participate in bigger moves. So in a nutshell, once market is above the halfway point, I anticipate it to hit the buy level. The buy level attracts the price higher. Now, if you see right now in S&P and well, kind of even on the Nasdaq, slightly down in S&P, but I'm going to keep the long position as long as price is above that halfway point. If it starts going below it, I will take myself out of the long with a loss, and I would be looking for a short trade. So let me quickly just bring the euro trade. So I did not put lines here, I apologize, but the buy was at 450. Definitely by the time I got to the chart, price was way over the halfway point, much closer to the buy area. Let me just show you. So again, look at the alerts. It's the last instrument. So that was the long. And so that's why I took a long trade. I'm going to stay in it. I'm going to place a protective stop. Give me 1 second. Okay. So still kind of down a little bit in the S&P and the Nasdaq, but they both are still above that halfway point. So I'm just going to stay in this trade. Well, and things are moving really, really fast. I'm just trying to keep up with the trailing stop. So that's what I mean. Once price is above that halfway point, the buy level is going to start pulling it up. And there is a perfect example, a sharp move now toward those higher prices. So I do have to get to the room. But just thought I would share this with you and just show you how things could be done. So it's really as simple as, well, I shouldn't say simple as, but it's a matter of identifying where the force in the market is. All right, so the room is now closed, but I do see a good opportunity for a long in the Nasdaq for the $100. So for those of you who don't know, I always recommend for our members just to go for $100 a day until they can grow their account enough. So I will take long here, targeting just 5 points, $100. You see we are above the long level, the buy level, what we call the long trigger, which puts the market definitely in a very strong position. And we are looking only for long trades. You see the S&P here. runs toward the long trigger, just kind of goes sideways. Not quite as strong as the Nasdaq that broke through. The S&P kind of goes back and forth. So this is the $100 trade, nice and quick and painless. And that's what we try to do at first. At first, really no one should be holding positions before they grow their accounts because of the trailing drawdown idea. So you just want to go for 100 and that's it. Now, if we look at some other markets, of course, gold exploded over the buy trigger, stayed bullish all day. The oil, a slightly different story. So the oil, I took earlier a long on the oil. It raced toward the buy trigger, but could not quite reach it during the pit session, and now selling off. So now it's below the halfway point, as you see. So if anything, if I was still trading, I would be looking for a short in oil to come toward the sell trigger here. All right, so in conclusion, one of the other things I do in the room and in the channel, I just kind of, if I can, if I see something obvious, I tell group members just the direction that one can expect. So early in the morning, you can see 8:41, so 50 minutes before the market opens. I said basically if they can firm up on 41.28, if they can firm up on 41.28, expect to move to 56, and 56 was just hit. So at 8:40, just so you have an idea what the market was at around 8:40. Here is 8:40, so it was around 41.27, so right at 28. And you can just see how important the 28 was, because if 28 would not hold, they would go not only to the short trigger at 41.05, but actually to probably 4,095, or at least attempt 4,095. But I said, as long as they're firm, as long as they can trade above it and be comfortable above it, then it's 56. So once they got above 28, this was the move to 56. We're now above it. They could get as high as 63 or higher. For the Nasdaq in the room, I said expect 13,181. So they're not quite there yet. But when I said it, they were trading. They just got to 13,116. And I identified 13,116 when the market was trading around 13,050. So I can't always kind of see the direction, but if I see something obvious, I do share it with the group in real time, and then traders in their own way, whatever way they choose, they can use that information to take trades. It was a great day. Tomorrow is Friday. Once again, all my information is in the description. So if you have any questions, just email me and I will do my best to answer. Thank you, guys.